Hello and welcome to Business Today Television, and we are talking about the much awaited IDBI Bank disinvestment. In fact, post its announcement in the budget, the government is of course looking at this challenging process, and it was last week that government also released its preliminary information memorandum, and government along with LIC are looking to sell more than 60%, that is close to 61% stake in IDBI. To talk more about this, I'm joined by the, I'd say, man on the mission, DIPAM Secretary, Mr. Tuhin Kanta Pandey. Thank you, sir, for joining us on India Today Group. My first question to you has to be that it's been a very challenging process, because we know that it's been one of its kind transaction in the banking sector. Take us through the process and also the kind of challenges that you had to meet.
Well, you're right actually, because if you see that we haven't really done bank disinvestment through a comparative bidding process, the way we intend to do it for IDBI disinvestment. This is actually in RBI's list. It's a private bank. The reason is that it's a company, banking company, not like a statutory bank in other PSBs. Secondly, government had divested a large part of its stake, more than 51%, to LIC some time back. Later on, there were some QIPs, and then which led to dilution of both government and LIC stake, but which still, LIC with about 49% and government with about 45%. Still together we own about 94% of the bank. So perceptionally, it is still being perceived as either the government having large share, as well as LIC, which is a government organization, having the management control as well, into more like a public sector entity. However, that's going to change, because now that we have an EOI, we intend to pass on the management control as well as a substantial equity of more than 60% to the buyer. So the basic challenge in this transaction is that we need to have initially we need to have clarity on what all categories of investors can potentially be eligible into this, and that had to be stated upfront, not as a later on leaving it to RBI's discretion there. So I think that we have been able to do. As you know, that we have got 5 categories which we have mentioned, that either they come singly or through a consortium. They can come and participate, subject to their meeting the eligibility criteria, which is fairly simple. One is a net worth criteria, which is about 2.85 billion US dollars, or about 22,500 crore Indian rupees. And the second one is on the PAT, profit after tax, in case we have an entity which is required by law or regulation to have a profit and loss account, then have at least 3 out of last 5 years, having a positive PAT. With those requirements, and plus of course there is a fit and proper requirements of the RBI, which needs to be gone as well. An important thing is that we have been able to work out with RBI that we keep the uncertainties in the transaction to the minimum, so that we don't actually proceed with the second stage unless preliminary fit and proper criteria that has been met, which means that the right at the EOI stage, in addition to the net worth and profit criteria, we also look at the fit and proper criteria by the RBI as well, before the second stage, which is the due diligence stage and financial bidding, is taken into account.
Yes. So you did mention a lot about the criteria, and this is also one such transaction where 2 regulators are involved. We're talking about the Reserve Bank of India and also SEBI. What are the kind of requests, or I'd say discussions you had to have with both the regulators in order to proceed with the transaction? And I'm sure there were certain requests that you must have also received from prospective bidders during the roadshow.
Yes, I think, as I said, with RBI, I have been able to say that we've worked out a thing where we are saying that there's a certain contours of transaction has been stated upfront. For example, we have said that 60% can be offered to any of this category straight away, either as a sole bidder or as a consortium. So this itself removes a lot of uncertainty as to what will be allowed later or not allowed. So this is one clarity which has been brought about. Secondly, fit and proper, how it will happen, at what stage it will happen. So it will also remove the uncertainties, because then they will not be forced to go ahead with their bids if they don't actually meet the fit and proper right in the beginning. So that is another uncertainty removal. Third, we have also mentioned about possible mergers, etc., which will be required, because sometimes you can't have two banking license. So if there are situations where two banking licenses may be involved, then one of them has to go, and there might be a requirement of a merger. Similarly, there could be a situation of NBFC. In that case also there could be, and that has been very upward stated that in that case we'll facilitate that merger, because that's how it is as per the regulations of the RBI. As regards the SEBI, we have made it very clear that the open offer requirements would have to be met as per the takeover code. But there are other issues like the period within which the minimum public shareholding will have to go through. I think that is under discussion, and that will be resolved in due course.
Okay, thank you for letting us know that, sir. So third question also is on the residual stake, that is the remaining stake that government and LIC will hold. Of course, the management control was one of your aims of moving ahead with IDBI disinvestment. So what happens with this remaining stake? It's too early to ask, but do you have a plan in progress?
Well, this will be post disinvestment. It will be solely the discussion of the government or the LIC to divest the stake in a manner in which they would like in the open market, and that to that extent, we would like to see if there is an upside, and we would be in a position to take it, and at the same time offer those shares directly to the public, which will also be in a way quite in sync with the need for having quite a bit of a float going forward.
Got it. During the road shows, you've met a lot of bidders, of course, who must have expressed keen interest. How confident are you of the bidding process that is, of course, awaiting? And what is the kind of timeline we see with the disinvestment after this? I mean, you've made the first announcement. What happens next?
Well, I think we have done quite many road shows, and we feel confident that we will have a good response to the UI, and we would be able to move forward.
Great. And what is the kind of timeline we see, sir?
Well, and timelines, as I said, it is December 16th, and then 23rd December for the physical documents, and 16th for receiving it electronically. And post which we will have the requirement of the fit and proper and eligibility criteria for the eligible people to be identified, and then due diligence phase and a financial bidding. And our intent is to have the financial bidding before March.
Before March. That still will not get added to the current disinvestment, I'd say, ratio that we have designed, is it?
Well, let us see how it goes, because this transaction also requires a lot of regulatory clearances, and the closing would of course need all of that.
Great. So one question I'd like to ask, because I think the government is also at a stage where in the recent months they had to shell out more than what was designed in the budget. So they are banking big on non-tax revenues, and disinvestment in dividend is one key aspect when it comes to the checks and balances that we are doing. we have a 65,000 crore realistic target that we have set for this year until, of course, March end. Where are we currently on the disinvestment road, and by March, what would you say could be the figure at?
Well, I think disinvestment, as you know, quite a lot depends upon the market conditions and our ability to close the transactions. We also require bidders who also equally cooperate with us and participate within the timelines. And then there are additional challenges of, for example, the real estate, how to take out the real estate business out of the cooperating businesses, which will require demergers, which have got their own regulatory approvals and so on. A process which is going on, for example, in Shipping Corporation and BEML and NMDC and so on. So, keeping into view these matters, I would say that we always try and put best foot forward, keeping in view the interest of the government as well as interest of minority shareholders of the listed companies.
Thank you very much, sir, for talking to us and for joining us on this chat regarding the process of IDBI disinvestment.
Thank you.
वीडियो पसंद आया तो हमें लाइक, कमेंट, शेयर और सब्सक्राइब जरूर करें।